Ladies and gentlemen, the Federal Reserve. I've been asked to do a video on it. I didn't think much of the video for a while. You know, what do I have to say about the Federal Reserve? There shouldn't be one. You know, there's all these videos. I think this is probably the root of what's going on here. There's all these videos online about how the Federal Reserve is run by a private corporation and they are basically enslaving us. We're all enslaved to them. Very bizarre. I didn't feel like a slave earlier walking down the street where I pleased. And these videos are basically correct about how the Federal Reserve is taking control of the money supply, and what they can do with it is actually a lot less than what is claimed in those videos. No, we're not all slaves. No, we're not going to be. Those people are reading from a Marxist view of history where if someone gets rich, someone else has to get poor, and that's just not true. The problem with the Federal Reserve isn't that those people are getting rich. The problem with the Federal Reserve is that those people are destroying wealth, okay? And most of them are government posts where you don't make very much money. If you may know about the biographies of some great American politicians, did I say great politicians? Anyways, some American politicians they went into politics after having gotten rich in the private market or having inherited money. But you don't go into politics for money. You go into politics with your money and oftentimes spend millions and millions. So the people running the Federal Reserve in these government posts aren't particularly wealthy. They're not going to get wealthy. Some of them have been wealthy and they may own stuff on the side, be parts of businesses or whatever, that they make massive amounts of money from, but they don't get a lot of money from running the Fed. It's just a government institution. Now, the Fed is probably farmed out to some private company. Our government has a fetish for private companies because it knows how bad it is at doing things after the experience of the Cold War and the Reagan years and what Reagan showed us with controlling, what's it called? Yeah, uncontrolling things, deregulation. What we know from that is that every time the government can find a private company to do something, they should. It's more efficient. So the Federal Reserve probably is controlled by a private bank. Still, that's not the problem. Okay, the Federal Reserve shouldn't exist at all. It's not that it should have a different monetary policy, which some people think. I got in a tremendous argument with one of my students' fathers back in Utah about this, and he said he thought that it should be managed different than it is today. And we got in basically a moral argument about, do you think that you are a sufficient dictator for the world to tell the world what percentage of inflation their money should have? And I said, I think it should be worked out by the free market. I don't think anyone should have control over it. I think it should be a function of the market. Fine. Let's talk about who's right and wrong and what the Fed actually does. Now, if you want a really good treatment of this, go to The Financial Crisis, What Happened and Why by Yaron Brook. Just type that in. I think it's on the ARI website. I was watching this when I sort of realized that there is something important to say about the Fed. Well, there was, but I need to be able to say something that hasn't been said by every video out there. You know, the Federal Reserve's in control of our money supply. This isn't a good thing. Now, after watching Yaron Brook and happily pointing you along to him, I can point out some of the other stuff that is not being said by these people out there running their mouths about how evil the Fed is and how we're all slaves. Now, first of all, let's go through some history of the Fed for 5 minutes so you know why, if you haven't watched those other people's crap, why it is that the Federal Reserve, where it came from, and why it is that it's bad. Some historical evidence. First of all, the Fed was established by the Federal Reserve Act in 1913 to alleviate bank runs. Okay, so any bank that goes bust or is about to go bust, runs out of money and people are demanding their money, it can either close its doors and go out of business, or actually after the Federal Reserve Act it can just get a check from the federal government. Now, those banks have a harder, banks that are subject to runs, just in all other factors being equal. I know that there are certain laws, like banks could only loan in their regional area, so some banks were heavily leveraged into agriculture, whereas other banks in the cities could do more mortgages and stuff, and that affects the banks too. Those are other regulations. But all things being equal, if these banks are having a hard time keeping their money in, and people keep getting the jitters and coming and taking their money out en masse, closing accounts, that bank probably isn't managing its money as well. It may be paying higher interest rates to get money in. That's always the case in the general marketplace. You go and look at what bank deposits into checking accounts will pay across many different banks, and you'll find dubious banks and online banks and stuff paying higher percentages, and more well-known and established banks pay very low percentages, because they're saying, if you put your money in with us, it's absolutely safe, you know it. Now that has been erased, basically. There's still that function in the marketplace, but because the Fed insures up to $100,000 and supposedly no more, although they have bailed banks out for just across the board, everybody and stuff, since there is that $100,000 ceiling where they'll bail people out to, there is still some function in the marketplace for how much interest you pay, and the better banks don't need to pay as much. So when the federal government says we'll write checks for any bank that fails, who are they backing? Which banks are they backing? They're keeping in existence the banks that don't do as good of a job. They're keeping in existence the banks that we would all be better off if they shut down. Irresponsible banks. Banks that aren't as long-term in their thinking. They're not as intelligent in the loans they make, and they're not as high return on the capital that they invest. This is bizarre. Why would the government why not just let those banks go bust every once in a while? And eventually, I mean, doesn't this smack of environmentalism in a way that wants to keep all the species now existing alive? We don't want any of them to die. We want to keep all the banks alive right now alive. We don't want any of them to die. Maybe once in a while the bank should go bust. And maybe the private market eventually will work out some way of having basic insurance on banks. Maybe, maybe not. Like there could be a credit rating system on banks, and they could be insured for certain percentages of money or something. This is imaginable. But why does the government write a check when these banks go bad? It simply puts a premium on bad banking. So that's just that's the history of the Fed and the overall analysis of its function. Now, within 20 years of its establishment in 1913, add 20 years on, yes, it's 1933. Within 20 years, it's tinkling in the economy. Just 20 years, just one generation. Everyone said, great, now the banks aren't going to go bust. 20 years later, what do we have? The Great Depression. It's actually started about 17 years later, after the establishment of the Federal Reserve. That's what I mean, less than 20 years. It's amazing that they could screw up the economy worse than had any situation ever done. In fact, even the Civil War wasn't as catastrophic on the economy as the Great Depression was. That is the Federal Reserve tinkling around, messing around. So it's got a bad record right off the bat. Now, I have to mention Keynesian economics for just a moment. Keynesian economics is everywhere today. The opposite of Keynesian economics is some sort of free economics, libertarian economics, not libertarian in the party today, but libertarian in the small L of the 1800s libertarian. Libertarian meaning freedom. That sort of economics is the other camp that's available. Keynesian economics is basically how the state should interfere in the economy to do things like keep inflation low, keep employment high, and whatever else the politicians are supposed to want to do. Keynes will help you do that. And it's complex, it's full of nonsense, it is a complete nonsense. But a couple of the things about Keynesian economics is it focuses on consumption. You may remember after 9/11, George Bush said, you know, everyone's staying at home, they're just watching their TV, this is bad for the economy, shops need to stay open, you need to go out and eat. So his message was, go shop to America after 9/11. Don't let the terrorists defeat us and make us all give up our way of life. Just go on with life as, you know, has been. Because what he's saying comes from Keynes. the economy will be healthier if people buy things.